Hello, everybody. This is Jean Falb, certified tax coach and enrolled agent, and I wanted to do a video today about 1099 reporting. Quite exciting. So some of you may be familiar with the concept with the 1099 MIS, miscellaneous, where you're reporting miscellaneous income to the recipient. And every business has this reporting obligation. You may not have somebody that qualifies to receive one, but you have the obligation to verify whether or not you should have sent one, and then you do need to issue them. They are used in IRS matching process. So if you issue one to somebody, the IRS is looking to match that person claimed that income on their tax return. And if you had a reporting requirement and you didn't do it, you are subject to fines. So first I want to give you, this is a lot of mumbo jumbo, but I wanted to convey, this is what the IRS considers a contractor. Oftentimes we say, well, I don't want them as an employee, for example, and so I'm just going to give them a check for $500. They came and, or they came and spread gravel, my brother-in-law, and I gave him $7,000 or whatever. And so the relationship is truly not a contractor. They're not registered with the state. They're not insured, which pushes all the liability for payroll taxes and insurance on you. That's a whole nother video I probably should do. But you can see that first yellow line. It doesn't matter what you think they are. It's whether it's based on the facts and circumstances in each case. So sometimes it's obvious. An attorney is probably set up to be a business. I'm set up to be a business. But again, if you're just hiring somebody who isn't registered with the state or a business and doesn't put themselves out to other people. So for example, I have multiple clients, but again, if it's just your brother-in-law who happened to spread some gravel for you and he doesn't do that for a living, he's not licensed, he's not insured, that's really an employee-employer relationship. So I guess I just want you to be thinking about that as you're making business decisions. You're not an independent contractor if you perform services that can be controlled by an employer, how it will be done, and what will be done. So you can see it's pretty narrow. The best insurance for you is to get somebody who is registered as a business, and that helps build your case. They have an EIN, or they have a valid business federal ID, and that helps relieve you of any possible reclassification by the IRS under audit that now all of a sudden you owe all those payroll taxes. And you're going to owe both sides because you didn't take them out of his when you paid him. So that's kind of the first page. Who is a contractor? And we use that word lightly. Who would be eligible for a 1099? And then what services would be eligible? So rents that you pay, services, who's not an employee. Some of this other stuff may not be applicable to you, but if you're a massage therapist, medical and health payments are made to you. If you're a farmer, crop insurance proceeds. And so I want you to be thinking about, even when you take your car to your business asset to the shade tree mechanic who doesn't have a license, you're supposed to be reporting that income. So be thinking about that as you make your business decisions. So how do you get the information on the person? You should be requesting this form to anybody that you're going to be doing business with as a vendor and or a contractor. So I would suggest that you go through your QuickBooks file or whatever software you're using, or whatever your method is, and based on what qualifies in terms of an activity and also the service and or rent or whatever. And when those two are, those are going to be your recording requirements. This form is available online. It's free. You're going to want to put your business name, your business address, because when you send it to the person, they need to know who's requesting it. If they don't return this, you have the obligation for future to withhold 24% of the payments to them because they didn't comply with filling this out. That's all on this is just a snippet of the form, but if you look at it, it's a 4-page form, and it instructs you and to do that. Now, who wants to do that? So it's ideal if you can get it before. So again, if you could get this before you pay them, you can imagine they're much more motivated to give you the information. Then once they get the check, they are gone. But I want you to just see these are the penalties that are possible for a small business under 5 million or less. That's most of us. So it's $50 per return if it's not more than 30 days late. And as it gets into the year, so if you didn't do it at all, it's $270 per return. And if you intentionally disregarded this requirement, then it's $550 per return. And that's just a lot of headache that you don't need. So I would just encourage you to start thinking about that now. It's going to be here before you know it. And this way you can start gathering your information so that when the reporting happens, which is in January, it has to be done by the end of January, you'll be in a position to do that. So again, there's my contact information if you have any questions or need help with that. But most of your softwares are prepared to do this for you. And often they have a wizard that will walk you through. Once you know who and what needs to be reported, and you can map that, so it doesn't have to be too terribly bad. All right, so that's my video for today, and I appreciate you watching, and take care. Have a good day. Cheers.